All right, well, we are a minute or two in, so we might as well get started. Hey, everyone. If you are hearing us, you're listening to the Origin Protocol weekly community call. If you're expecting something different, we hope you stick around. We're glad that you're here. On today's agenda, we have quite a bit to cover. We're starting with some announcements. Then we'll do a little bit of sprint planning. Daniel has some usage insights for us. I think Doman's going to do a quick demo of the visual analytics that he's been working on. Then we'll talk a little bit about what's next for our convex strategy. Possible improvements to rebasing based on some activity that we saw over the weekend. And then I think Orion was going to talk through an idea to have OUSD provide its own liquidity. And then finally, Josh, who I think will be joining us a little bit later, will hopefully be able to give us a quick check-in update on our liquidity mining program that we've been running on Curve. Is there anything else that anyone had in mind for the agenda that isn't covered already? You can find the meeting notes or the agenda in the Discord Origin Dollar discussion channel. Somebody would post it there again if you haven't already. I'd appreciate it. And if I didn't say already, you can join Discord at originprotocol.com/Discord. That's basically the back channel and where we hang out most of the time. So please join us if you're not there already. So we had one announcement. Daniel, did you want to mention something about the OUSD? That's OGN buyback?
Yeah, and as when the price of OGN goes down, the buyback contract buys more. Also, as our yield goes up, it buys more. So, in the last 2 days, it's purchased 11,000 K of OG or 11K of OGN, which is nice to see it just cranking away buying. Doesn't really fit into any other category of discussion or planning or anything. It's just cool to see it happen.
Cool. And I think someone had asked in Discord how frequently that happens. Did you want to talk through that real quick?
Yeah. So 10% of OUSD's yield is allocated toward the buyback program. And so that's earning block by block. And then either once a week or when a large mint happens, it will go through and use the OUSD that's been set aside and buy back OGN. So minimum weekly, sometimes more frequently.
Keeping an eye on that. It's great to know that it's working as expected. Any other announcements or things to note? Any surprises? I didn't catch any from the prior week. Interrupt me if anyone thinks of anything, though. Let's run through sprint planning real quick. We are wrapping up a 2-week sprint, and that ends on, I think, Wednesday would be the last day. We'll start a new one on Thursday, so I thought we'd just take a quick inventory of what we're working on, check on the progress, and then touch on what might be a candidate project for the next 2 weeks. So there's we talked, I think, last week quite a bit about moving to decentralized on-chain governance, and sort of talked through all the different projects that we would look at for inspiration. And I think it sounded like we had concluded, Daniel, that we would borrow the compound governance contracts and then build our own front end. Is that the official decision?
I believe that's the official decision, and I believe Tom is now in charge of that project.
Cool. Yeah, Tom, I know you mentioned you might get started on it. Did you get very far late last week?
Not too far, just sort of trying to understand what needs to be done.
Cool. And does that start with the contract side, and then we'll add the front end next, or is that the right sequence?
Yeah, that probably makes sense. Am I also doing the contracts or just the front end? Or is Daniel working on the contracts?
I'm open. I had been assuming you're doing both, but I can do the contract side. I think Compound's kind of rapidly developing, or not rapidly developing, but they're about to switch over to the new version of Solidity and publish the audits on their contracts. So I think another week or two we'll have audits out on fresher version of their governance contracts. So yeah, would you like me to take care of the contract side of the governance? You do the UI?
No, I can. Either or. I can also take care of that. I'm just sort of wondering what you've got on your plate and how we should split it up. But I'm happy to do both or one or the other.
Yeah, I'll do the contract side. If you want just for purposes of now, just use their Governor Bravo contracts. I guess the beta ones that would fit nicely into our contract repo, because since they're V8s, we can start there, and we can refine the contract separately from the UI as long as we keep the interface the same.
Sounds good.
So, at the risk of jumping ahead, I had tentatively put that implementation as a sprint priority for the next 2 weeks, but it sounds like Tom's already getting started on it. So, I think a high priority, an immediate priority, would be defining what those front end pieces are going to be that we'll need. I don't know that we've done that yet, so not sure if Tom, you want to work with Josh and or Daniel and take inventory of what those things would be. We probably don't need any design work, I wouldn't think. We can just put something together. I know, Tom, you do a great job with just making up the front end as you go. So if you don't mind doing that, that's probably the way to go.
Yeah, sure.
Yeah, feature-wise, it's pretty much what Compound has, plus maybe gasless voting if it's easy for us to add in. But otherwise, it's basically what Compound has, which makes it's easy when we both know how it should work.
Cool. So Tom, you were working on improving ledger support in the DApp. I think that's pretty much done, but I saw there was still some discussion later last week about how to handle the different derivation paths, giving users the ability to make selections there, but preferably intelligently trying to determine what the user would want without having to ask them. It looked like you might have handed that off to Doman. Is that the case, or did I misread any of that?
I haven't really handed it off. I know Damon raised the issue on GitHub. It sort of handles most use cases now, but there's definitely refinements we could do to make it nicer. But I kind of left it where it is, and sort of hope a contributor might pop up and want to work on it, or someone else might be keen. But if it's anything that we really want to get done, I can do it ahead of the governance stuff. But it seemed like it wasn't a major priority at this stage.
Okay.
Yeah, what is the priority, Mike, on these ledger improvements?
Well, from my perspective, oh, Josh, I think you unmuted.
Josh, we see you unmuted, but we don't hear anything.
Yeah, while we're waiting on Josh, I think he might be on the road. I was just going to say that I feel like if the thing works and gives and offers the user a path to using the DApp with the ledger without a bunch of clunkiness and bugginess, then that is sufficient to me. And I feel like moving on to on-chain governance is more important. But I know that these are really high-value users. So curious to know what Josh thinks. You want to try again, Josh? I'll follow up after the call and confirm with Josh what the priority is, and we'll go from there if that works. There were a handful of improvements to the contracts that Daniel, you had thrown together last week, and I think that some of them are on their way to being deployed. One is the removal of the buffer, and then the other was removing Mint multiple.
Yes. So as far as buffer removal, we've set the parameter to 0 for that. And so there is no vault buffer being used on the vault contracts right now. Every stablecoin that's put into OUSD is working to earn yield right now. I have a code change or reviewed and tested that removes the code to handle the buffer. However, I think we're going to wait just a little bit to put it up since there's not really a rush on deploying that. Same thing with the next two changes as well, one of which removes mint multiple, and the other removes a duplicate event that only happens when I think a strategist withdraws funds from Compound, or maybe anybody withdraws funds from Compound. But since those are lower priority things, the code change has been made and reviewed, and at some point we'll put them live.
None of those three are included in the deployment that was happening over the weekend.
Correct. So the deployment that happened over the weekend makes the convex strategy collect CRV rewards and sell them, and it now holds convex coins. And so that deployment has been reviewed and tested and is now waiting the deployments to be reviewed and then entering the time lock.
Sounds good. All right, and then Doman is working on the visual analytics improvements, and he'll show us his progress a little bit later. I imagine that might spill over a little bit into the next sprint, just depending on how far we want to go with it and to what degree we want to integrate it with our site. And then the last thing that it doesn't feel like we're going to get to this sprint is a new staking contract and changing the way OGN staking works. So should we just push that to the next sprint, or Matt or Josh, do you have any comments on that?
Yeah, I would say let's be prepared to move quickly, but I think Josh and I still need to talk through a couple things and get some final feedback from the team before we put up a proposal, and then even then we want to get the community involved and do community governance and stuff like that, so that something of this magnitude, we do it thoughtfully, strategically, and make sure everything works tightly.
Good deal. The only other priority that I had on the list for the next sprint is we need to make some other improvements to our DeFi Pulse adapter. We fixed it so that it's now counting the C tokens properly. That moves us from being at the bottom of the list on their leaderboard up to, I don't know, somewhere around 45 to 50, I think. But we'll want to change it to account for the A tokens in the Aave strategy, which I think is a pretty simple change. Where it gets more complicated, I think, is measuring what's in the convex strategy. So I don't think we need to get into any of that here, but that's a project that a new contributor could certainly jump in on, or we'll see how it fits into Daniel's workload and everyone else's in the coming 2 weeks. Any other comments or questions on the current sprint priorities? If you think of something, don't hesitate. But otherwise, I think we'll jump into several of the discussion topics, maybe starting off with Daniel and your insights that you found looking at the numbers.
Yeah, hang on just a second while I pull that up.
Sure. And while you're doing that, I don't think I said already that if this is the first time you're joining us and you would like to introduce yourself, or if it's not the first time you're joining us and you'd still like to say hi and let us know what you've been up to, we'd love to hear from you around the end of the call in maybe 30 minutes or so. But I think we got a lot to cover between now and then. Daniel?
All right,
kinds
can
of,
you guys jump in and see my screen? Let me
Yeah,
know if you.
all kinds of fancy new chimes and noises
Yes,
when you
it's
do this stuff.
terrifying.
But
Okay, so let's just start with a chart of this is OUSD holders, how much each OUSD holder has and how many there are. So we can see that there's the most common thing pre-liquidity mining campaign was for somebody to have a little bit over $1,000 worth of OGN. This is the number of zeros basically in the number. So here's 1,000, here's 10,000, 100,000, 1 million. And this is somewhat a kind of classical-ish thing, drop off where you've got a lot of users holding a small amount, kind of like the 80-20 principle, and a few users holding larger amounts with peaks at 100 and 1,000. So after the, well, one more number for you. The median holding before this was $517 for the median OUSD holder, and the mean, the average, including the bigger ones, was 31,000. So our new users coming in have been a surprisingly different pattern from what's been before. So this is the pattern of new users coming into OUSD since the liquidity mining campaign, and completely ignoring everyone who's gone into the liquidity mining side. This is just focusing on the people, regular OUSD holders. And what you see is this has a very different shape. Instead of being a long tail over here, the peak is actually somewhere above $10,000 for this distribution. The mean is actually about $8,000 right here for 50% of OUSD holders who have joined our campaign or joined during this campaign are holding more than $8,000. Lastly, there's a whole lot of big ones. So the actual average dollar held by a new person who joined OUSD, a new account that joined OUSD, is actually $80,000 during this, which is pretty incredible. So we're really picking up a mix of users that is shifted very high. Now it still targets roughly the sweet spot of $10,000-ish to $20,000 kind of. It makes a ton of sense to put your money in OUSD at that point because gas fees will eat you alive anywhere else. And so we are seeing that, but it's really impressive to me how many we're seeing on the much larger side, how many 100,000 and million people in there.
hey, Daniel,
That's the quick summary, yeah.
I was just going to ask, these numbers that you're referring to are all regular OUSD holders. These people are not participating in the Curve incentive pool, right?
Correct, yep. So that would weigh this a lot heavier towards big users if we included them in as well. But yes, this is just regular OUSD holders earning the yield. Yeah, so any questions on that so far? Okay, it's kind of crazy, but almost everybody has earned money who has OUSD. That's pretty simple just because of the fact that everybody's getting rebasing yield. There's only been, I think, less than 20 accounts that have actually reduced their OUSD holding in the last few weeks. It's almost nothing in comparison with all the rest of them. So that's really the fast overview on it. It's been, this is kind of the old distribution with, you think of like dropping a snowball on it with the new users over here, and we can see that people increase their balances too as well. So yeah, that's basically the quick overview on the users. It skews a lot bigger than our previous distribution of users, and everyone who's been coming in is, it averages out to being a large amount of money that they've been moving into OUSD.
And the users whose balance has gone down, that's because they've moved out of OUSD into something else, right?
Yeah, they haven't lost money on OUSD, if that's what you mean.
Yeah. Cool.
Yep.
Who else has a question for Daniel? There are a lot of, oh yeah, Frank?
Question for Daniel. How did you pull the data, Daniel? Did you get it from the Analytics DB or did you pull it from on-chain?
All right, you're going to have to laugh, Rock. I just used the reused the precision upgrade tool to pull down all balances and verify everything. So I already had the old balance we did the precision upgrade right before launching the liquidity mining campaign. So I used that for the start, and then I reran the same tool and got the end.
Got it. And for everybody else in the code, it's just a script that Daniel has, and it's actually checked in our open source repo, so anyone could pull that data and play with it.
Yep.
So there are a lot of interesting questions to answer with that data to figure out how what the adoption and usage looks like. One of the priorities right now is for us to have a visual dashboard that answers some of the most critical questions that that most people would have when looking at OUSD. So Doman's working on putting that together, and I think Doman, you wanted to show your progress. If you're ready.
Let me share my screen. Yeah, just looking at the data, Daniel, that you've shown, that's like it's super interesting and insightful because you can answer, you can sort of answer like a lot of questions, as Mike and I were wondering in the Discord, has the trust gone up? Is because of the higher API APY have the are more people putting in money because it just approaching it from the what's it called, risk adjusted returns. It makes more sense and stuff like that. So yeah, I'm very excited. I'm excited to try to get what you've shown. The comparison between two, kind of breakdown of OUSD holders by their size of their OUSD amounts. We're pretty cool, if we can do it like a time series of it, or that you could choose two different dates and it would show you those graphs. And I think June is like the right thing for that. It's got like a lot of already helper stuff there for dealing with token balances, just not rebasing token balances. So we're gonna have to get our hands dirty a bit there, but I think it's doable. I'm very close to getting that done. So I've been playing around with it a bit later last week and over the weekend, and currently what's available in the dashboard, and this is like the cool part about this is all like real-time data, right? So if you want to refresh it, I think it says, okay, last updated 3 hours ago. I haven't figured out yet how often it refreshes, but you can just open this specific query, for example, and and run it, and it's this one, for example, is an easy one, APY, and it's almost instant. So okay, what we currently have in the dashboard is OUSD APY and trailing averages. Currently, I have it only from November. That's when we did the upgrade. I'll explain later what that is, but I will add previous data to this thing as well. So this is the change of our APY. Here is the kind of the what's this kind of type of graph called? I forgot. Bar
Bar graph.
Bar graph. Thanks. Yeah. So here is the OUSD supply. And also like the 13, 14 day and 7-day averages. If we want, we could also do this as parameterized input, where you can specify your own, the amount of days, and it would draw that line. Then the more interesting one is the breakdown of OUSD holders. This is similar to what Daniel was showing right now, but I just have like a lot less groups, which got me thinking that the view that you made on the data is more insightful, and I probably should do that one as well. And the cool thing about Union Analytics is that it's got a lot of stuff there, right? For example, if you just want to cancel out the meta pool and Uniswap, for example, you can immediately see this is the amount of OUSD that's held by wallets that have more than 100K in, and those would be 44 people. And between 10K and 100K, it's like 101 people, and between 1K and 10K, it's 268. And you can inspect the data here. Yes, so that's what I have right now. Maybe if anybody is interested, I can just show quickly how the tool functions, because I think it's pretty interesting. So it's, what it basically does is just saves like all the transaction data and log data into Postgres database, and already transform data to some extent so that it's easier to read and manipulate. And you can even search by the project name. It's got some like pretty general ways of how it stores protocol data. For example, what's it going to do is just decompile our contract and check all the functions and all the events, and already decode them and store them. That's like super useful, for example, because I needed, for example, for getting the APY, you need like a total supply updated high resolution. Let me see if I have this. Yeah, for example, all right, this part of it. And you can see there's like no special magic needed. You just query from the correct project and events table, and you're immediately going to get all the log data you require. There's also, of course, downsides because our contracts are upgradable. We used to have total supply updated without the high res, and so because our contract code has changed and that's no longer in the source code, that event is not conveniently here to be able to be queried. So there's just like a bit more there's just a bit more work you need to do. So you can just query, the Ethereum logs table, and you specify our contract and the topic which would get you that specific event. And you also need to do the manual decoding. So this is like a user-defined function that I've defined here on top, which extracts that bit of hexadecimal data that we need to get the data required. So this is basically the equivalent. This bit of code is the equivalent to this one. It's just because our source code has changed. If it wouldn't, we would be able to get it like quicker. And everything is expressed in SQL. So if you cannot do it in SQL, you're kind of out of luck, I guess. But there are a lot of user-defined functions, and you can also commit your user-defined functions, or for your specific project, if you want to reshuffle or reorder the data into some sort of view, which you could then query using their tool. You can do that. You can submit a pull request. I haven't obviously gone through that process yet because there was no need for it right now. And actually, surprisingly, using PostgreSQL, surprisingly, a lot of things get done using SQL and not needing to pull the data into some kind of programming language. And then it's more convenient reshuffling it there, of course. But which kind of makes sense that you're stuck with SQL here. Cool. So what else is there? Maybe the most interesting thing was how to get, I'll probably do a separate, maybe a tech talk or something about this. How to get, token balances of any account, of any time, almost instantly, or of all of the accounts, without, without doing any Web3 requests or stuff like that.
Yeah, that'd be really cool to have a tech talk on it because I can see that having the whole blockchain in a database all tabled out for you is pretty handy kind of thing. A very handy tool to have in your toolbox.
Yeah, it's super. It's actually, Daniel, like a lot of the data is the exact data we already have in our analytics backend. And
Great minds think alike.
yeah, yeah, you set it up right. So, so I think actually, if we'd be forced to just use SQL there, we could get to the same answers. But you just got you're spoiled with having Python handy, and you don't want to like write 50 or 100 lines of SQL for something you can do in 5 lines in 5 lines in Python. So I guess that allows you to be lazy there.
Yep, I'm always happiest when I don't have to write any code and things get done. So, if this can take over the workload for it, I'm happy.
Yeah.
Hey, Domain, do we have any APIs, or is it just you can only build like these dashboards on the UI side? Can you put? I guess my question is, can you pull the data from Dune Analytics using an API?
I don't know. I will check that out. That's a good point. Because maybe then, are you probably asking then maybe we would need our own analytics, or?
Yeah, I'm just trying to understand the capabilities.
I forgot. Where's the pricing? I'll find it.
That was actually gonna be my question. Price.
Yeah, I'll check that out. That would be interesting because we would. There's like a big part of our infrastructure then that we would need to take care of. So that would be like pretty cool. Yeah. I know you can embed, all these graphs and query results. You can embed obviously, and it's still fetched from their side. But I'll check out if there's an API available.
Cool, thank you. Yeah.
That's what I was going to ask about, Domin, is are you planning to embed these into analytics.OUSD, or have you looked into that yet?
No, for now I'm just trying to get like all the most useful data I can. But it's usually embedding these sort of things. It's like super easy. So yeah, I don't know. For sure, we can. I don't see a reason why not. Having a dashboard on Dune and also on our backend if we want. It's it's the same data. It's one source where we tweak and manipulate it, and then it's just displayed on different locations. So I don't see any problems with overhead.
Great.
It's easy for us to share these dashboards, so we can collaborate on them, and multiple people can add queries.
Yeah, by default, everything on Dune is open source. So that's one of the super strong points. Because I think if you select Pro, you can have private queries and stuff like that. But if you're using the default, everything is public, and it's super cool because you see how people from the community have solved their problems, or you can search for some kind of token balance or whatever, and sorry, these are dashboards queries. And you can see how others have approached solving a specific problem, and it is. Sorry, what am I doing wrong? Token balance.
But if we want to if I want to add a graph to the dashboard you already made, can I just add it, or do I have to create my own fork of your dashboard, or do I have to send you the query and have you add it? Like, how does that work?
I don't know that. I haven't done that yet. I'm sure you can check all my queries and you can see the sources,
Yeah,
but
at a
I'll
minimum, you
check
can
that
grab
out as
his
well.
queries and stick them in your own dashboard, but maybe you can clone it, the whole dashboard. But every little graphs box there is copy paste, or you can copy the code out.
So if I go to somebody else's dashboard, share. Yeah, I'll check that out. I'll check that out. How you can collaborate on these things.
It's really great, Doman. Thanks for making progress on that. We're running a little short on time, so I think we should probably jump to the next topic or two. But anybody have any closing questions for Doman?
One last thing I'll throw in is another metric that might be interesting to track is the true number of holders of OUSD, because all the people who are participating on Curve or Convex are just going to show as one smart contract, and there could be hundreds of people inside that. So that might be another interesting metric for us to track.
For sure. Good point. So I wanted to ask. Oh, Doman, go ahead.
Yeah. So that's actually, I think, just if you cancel, the curve meta pull out, which is shown just as one holder, one holder of holding 178 million. Those would be, or all others actually, all here, are the true holders, I guess. I would have to exclude more out because currently I only excluded Curve and Uniswap. But yeah, you're probably true holders, the one who are.
True holders being there's a bunch of wallets that have added funds on Curve or Convex, and that's going to show up as one address in our analytics. It's just going to show up as the Convex smart contract instead of showing as like hundreds of different wallets. So it's a little bit misleading in that if you look on Etherscan, it looks like there's not that many people using OUSD, but there's actually way more. It's just we're not surfacing that number.
So it'd be actually cool to get the amount of people that hold liquidity pool tokens of the various pools and show those as holders, I guess, somewhere separately.
Yep.
So I wanted to ask what's next for the Convex strategy. Daniel, you mentioned earlier that we will, as soon as this deployment is done, we will now be harvesting the CRV, but we'll be holding the CVX. This is a little bit more complicated. What do we want to do, though? Well, I guess, is there any other action to take there right now, or are we just going to come back to it later? And then we'll talk about allocation.
Correct. No more action to take there. Once the time lock goes through and it gets deployed, or once it's sent to the time lock and executed from the time lock afterwards, it should just start going, selling its stuff. And so, yeah, moving on to the allocation then.
Great.
And that's partly a Josh question, as well as everyone else. And I'm good moving it up now.
So the current allocation in Convex strategy is 300,000.
That's correct.
Out
yes.
of 213.5 million. So is a nice conservative way to get started with the strategy, but it's by and large not really having much impact yet. So how comfortable are we ramping it up, and how quickly?
I think I like ramping it up on kind of a logarithmic scale. And so the next step on that scale would be some number of millions. And I think somewhere 3 to 9 sounds good to me. But Josh, what are your thoughts?
Yeah, so I'd be more aggressive on this, just because the yield on this is such a significant step up, and also I think we all feel fairly comfortable with the Convex smart contracts and the logic there, that we don't have any particular concerns about moving funds into it. So I would vote we go straight to $100 million or more in this new strategy if we are if everything's looking good. That said, I do think we need to figure out the CDX portion ASAP, or else we're not going to see as big of an impact of using convex instead of curve. Whether we end up vote locking our CDX or not, we do want to go ahead and implement the logic for liquidating multiple rewards tokens, because that's a pretty common use case that we're going to run into again. So I do think, the sort of a default action here should be to liquidate our CDX. If we were to, hold our CDX and vote lock it and then have it vote for our pool, that adds a lot of complexity to our contracts I don't think we want to tackle right now. So I think we're better off just dumping it until we come up with a bigger strategy around how we're going to do it. Outside of the contracts, origin of the company is buying and vote locking CDX and millions of dollars worth. So I think that's probably an easier way for us to boost the rewards versus trying to do all of that voting from the protocol itself, at least in the short term.
Yeah, I agree with the. Oh, go ahead.
I was going to say, I pretty much agree with everything Josh said. I think we should be aggressive with the funds and simple with the logic. And if we want to increase our, the CBX that the company holds, we can do that with their treasury, right? Let's keep things simple and fast. Right.
Yeah, and I was going to add, as far as figuring out the allocations, I'd propose that we start doing like a weekly or bi-weekly snapshot vote, where we would have each of the strategies and each of the currencies, and then OGN holders could just vote on the weighting. This is very similar to what other projects are doing, and then we can just use that, and then we can have a strategist basically execute the will of the people. But there's a lot of money at stake. This is a decision that the community could be making, and it's relatively low effort on our part to actually do this, and it will be a little bit of a forcing function for us to be more regular and consistent about figuring out the allocations between these different strategies versus just leaving it in autopilot mode.
Yeah, so I really agree with you on having the contract sell it rather than trying to do anything complicated with the convex. I think as far as being aggressive with it, since that is a strategist action to reallocate funds, we can do that without long periods in between, or so rather than just going straight to large amounts. Even if we were increasing the allocation on a day or every other day basis, I'd feel more comfortable still having a little bit of a ramp on it, if that works.
I'm fine ramping. It's just let's just make sure we actually continue ramping, because we've had a bad habit of saying we'll ramp it and then we're very slow to actually execute. So if we're let's ramp it, but let's be aggressive and make sure we're getting to that $100 million number within a week versus it taking us months to get there.
Sounds good.
Agreed.
And yeah, I'm all for starting to go do a snapshot thing. Now, in the past, we've done longer snapshot votes when we have a shorter voting period on those votes. Oh, in the past, we've done like a week.
Yeah, we could do. Yeah, yeah, we can do it either a shorter period or we just we just plan ahead, right? So it's where we give people time to vote, and then we have on our calendars to execute whatever the vote came in at, and we just have it on a weekly or bi-weekly cadence, so that we can continue to adjust things.
So would that be
Yeah,
the case where we have?
I think if it's at a regular time, then it's easy enough to log in, see the information, or go in, see the information, cast your vote, and then go from there. So, yeah, I think if we do like a shorter, even 1 or 2 day time on it, but that it's going to be every, let's say Monday, is when the vote comes, is when it's time to vote. Then we can have a very good cadence on it, and then do the strategist actions on Tuesday or something.
Ryan, did you have a question? I think your mic might be a little bit quiet.
Yeah, is my mic really quiet? Sorry. Can you hear me?
Yeah, go ahead.
I was just gonna say, is that going to be a case where we will have whitelisted strategies and we'll be able to basically vote for what weight we want to put on them, and then over time we'll just add more whitelisted strategies as they're proposed?
Yeah, I think that's right. So right now, the only strategies we have are Aave, Compound, and Convex. Obviously, all three of those are whitelisted. Those are all very safe strategies. In the future, we'd like to have a wider array of strategies and perhaps adding in some, more aggressive strategies. And then that's really where community voting is really, really important because it's up to the community and the holders of OUSD to decide how risky the positions we should be in versus it being something that our team is making unilaterally.
Okay, but in terms of convex, not all pools are created equal, so that's why I was wondering it. For now, it's just 3 pool, but we could expand into other pools, even our own, if potentially.
Correct.
That's
And that leads
Yep.
nicely into the next topic, which was something we've been discussing in Discord. I think Orion first proposed it, and then Daniel was riffing on it quite a bit. Orion, are you here? And do you want to talk through that idea?
Yeah, let me see if I can share my screen. I have to rejoin, so I'll be right back.
Cool. While we're waiting on him to do that, one of the other topics we had in the agenda that I think we're going to skip over in the interest of time is there was a question in Reddit about a drop in the pending yield that happened this weekend, and we reached the conclusion that that had happened because a large holder of OUSD moved out of the Curve pool and back into a regular rebasing wallet. So I think we'll come back to this topic maybe next week and talk about what this might mean for how the rebase works. But I've linked that question in Reddit here, and then that conversation happened in the Origin Dollar discussion channel in Discord. So you can go back and look at, I think it was Friday night when we were having that conversation.
And while we're waiting here, I was late joining. I had a lot of problems with my Starbucks Wi-Fi and AirPods and some combination of the two. But one thing I wanted to add when we're talking about the ledger support, I think one thing that's really important for us to do if we're not already is just collecting analytics on which of those connection options people are choosing. Because there's no way to tell just from looking at the wallet addresses. If people are using Ledger, if they're using MetaMask, it's impossible to know. But that would be very useful information as we decide how much to invest into these different things. Intellectually, it makes a lot of sense to me that all these massive whales are going to be using ledgers. That's how I would do it if I'm, managing millions of dollars. But we should, it's easy enough for us to collect that data. Let's go ahead and add that to analytics if we don't have it already.
That's an action item for me.
Cool. I got you on the list, Omen. And also one for you to investigate how collaborative doing analytics can be. Orion, are you back?
Thanks.
You want to give it a shot?
Yeah, can you hear me?
And we need
I can
Yes,
hear
again.
you and I can see you.
All right,
we need to click watch stream and otherwise take it away.
cool. So I can start with kind of the high level scenario analysis here. So in general, yield farming is kind of like a drug. You have to wean yourself off of it because it's not long-term sustainable. So what I wanted to explore here is how the Origin could maintain liquidity within the OUSD pool in a way that is more self-sustaining. So, if you look at kind of the traditional yield farming approach where you just provide OGN incentives only, I mean, you could throw away $10 million over 10 weeks and, attract an initial maybe 140 million in liquidity. But when week 11 rolls around and, into the future, all that liquidity is going to leave because those incentives dried up. Now with the advent of convex and curve and bribing, you can use both the OGN incentives, plus you can also bribe CVX holders over 10 weeks, spend an extra $1 million, and look, you get even more liquidity. But again, it's not going to be self-sustaining. Assuming that CVX voters vote with their dollar that they're earning, they're going to eventually no longer incentivize your pool, and that liquidity is going to dry up. So if you're looking for more of a long-term approach, I built out an entire model here that answers kind of this question. Well, what if I actually buy CVX and I start vote locking it? What is going to be my return on every dollar invested in CVX from a protocol's perspective? So here's kind of a baseline. If you were to just buy $10 million worth of CVX today, assuming CVX is $25 and CRV is around $3, and you want to maintain a convex APY of around 27%, which is what it is today, you can expect to get somewhere around $250 million in liquidity on week one. Now, CRV and CVX are both inflating in terms of their circulating supply. So by week 11, you would have already lost about 17% of your voting power. So it's important then to look into, well, since we have all this liquidity, what if we start deploying it into our own convex strategies? It doesn't necessarily have to be your own convex strategy. It could be another convex strategy, as long as you're accruing the CVX rewards that you need to kind of maintain your position. But in this case, I looked at what if we're investing in our own pool. There's other advantages, such as maintaining the peg. You're kind of providing the other side of your own stable coin in that pool, and you're kind of acting as that liquidity provider of last resort. So you can help also maintain liquidity even when you do lose some of that voting power. You can still come in and incentivize it. But so under this scenario here, if we were to buy $10 million in CVX, and we are also taking 30% of the protocol's own liquidity, so for that $250 million, we're going to make up about 30% of that. By week 11, we would actually expect our voting share to increase, and we would expect our total liquidity to increase by about 9%. And it varies based on how much you put in here. If you only invest 20%, you basically break even. You keep your liquidity pool about steady. And this is all assuming that every CVX that the protocol is yield farming is going right back into vote locking. Every CRV is being sold, and that's where you get this baseline protocol APY. So this is coming 100% from CRV. Now, I would also recommend, as long as the CRV and CVX CRV peg is maintained, we lock that into convex to help build the flywheel. Because a lot of the assumptions here as well is that over time, convex is going to basically get to almost 100% of the voting power on curve. Right now, it's close to 70% when you take into account the amount that's also being delegated to them by yearn or yearn. But over time, it's going to get close to 90% to 100%. So that's really the flywheel there. And even if you are keeping all the CVX and just vote locking it, and you're dumping the CRV, you still would be outcompeting the unboosted average APY that we've seen for the OUSD holders up until this point. So for the past 30 days, it's been somewhere around 3%, 3 to 4%. So this, in my mind, presents a really great strategy where not only can you, maintain liquidity, you can actually grow it by investing more in your own pool, and over time, keep growing it in a sustainable fashion, so that you're not just attracting a whole bunch of liquidity up front like we are today. So we have 350 million liquidity in the convex pool. But what's going to happen when the music stops? When week 11, week 12 roll around? So that's why it makes sense to start investing the funds, and it sounds like that's what's already being done. So that's great, to maintain a more sustainable liquidity farming position using the great flywheel that's been built on convex. So, any questions? I can get into the sausage making if you want at a later time, but this is kind of high level.
Yeah, can you? This is amazing data here. Do you mind sharing the spreadsheet in the channel, or at least a read only version of it that people can view?
Yeah, I can give a read only.
And thanks for putting all this together. I think long term, we completely agree with you that this is the way we want to go. Toward, like you said, towards sustainability. The liquidity mining is just to kickstart it and grow the circulating supply faster, so that we can build confidence for people to come into it. Circulating supply is a big factor there, but also like helps with us with change conversations and integrations and other things. But it's not the long term strategy. We can't continue to give away OGN in perpetuity. So this is definitely the way we want to go. One interesting aspect of this is what you talked about of like putting the OUSD into our own pool and then having us actually supply liquidity to our own pool. Daniel, do you want to weigh in a little bit more about your current thinking on that? I know this is something you've been thinking a lot about on what that would look like and what the benefits might be there.
Yeah, so this is just kind of an orthogonal fun thought of, and sorry, I don't have a diagram on it, but if OUSD puts funds into 3Curve, you could take some portion of those 3Curve funds and move them to the OUSD metapool, minting OUSD at the same time in a matching amount. And so if you had $1 million of stable coins added to OUSD, you could take your $1 million of 3Pool tokens, mint an equivalent $1 million of OUSD, move the pair of them into the 3Pool or into the metapool, and then your total supply would go up by 2 million in effect, or the supply of that strategy would go up by 2 million. And then there would be liquidity available for trading into and out of OUSD, and OUSD would be getting funds on that, and OUSD would be collecting any rewards on that pool as well. That's kind of the quick overview. Sorry, I didn't prepare an actual presentation of it on it, so it needs diagrams to be explained well.
Yeah, I mean, the big advantage there too is you help maintain the peg by providing liquidity yourself, which is something that other projects such as Alchemix have done as well.
And it seems like with us with a stable coin versus a stable coin, if the price moves in either direction, we basically can profit off of it. If the OUSD as a whole can profit off of it, because if the price moves to where there's more OUSD than stable coins in the pool, we can just simply burn more OUSD and we've got a stable coin profit in the end. Similarly, if the price moves towards being with more stable coins than OUSD, we've got just a clear profit there because we've got more stable coins than OUSD there. But yeah, I'll try to doodle up something on it. Go ahead.
Yeah, but where are we at with this proposal? Is this something we want to do more thinking and analysis on? Are we ready to start specking some of this out? Like, where are you at as far as confidence that we should move in this direction?
At this point, from my point of view, it was just like scribbled something on the back of a napkin, and so and then made a little bit of a spreadsheet. So it's not a hugely confident thing. I love people who are actual DeFi experts to take a look at it and see if it's sane or not sane, if there's any kinds of problems in it. So I can write something up this week in more detail on it.
Yeah, I think that'd be good. It's certainly a compelling proposal. It's something we talked about casually in the beginning, but hadn't quite figured out how to do it. But it's definitely worth going into more discussion on. It's complicated enough. I think we should probably write up a proposal and try and outline the benefits and any potential risks with this model, so we can actually discuss it intelligently.
Yeah, and Orion, I'm really looking forward to working through your spreadsheet and seeing what's in there.
Very cool. Thanks, Orion, for putting that together. And Daniel, I added the action item to the doc for you. Josh, did you want to give any more of an update on liquidity mining program before we go?
Yeah, so we're running low on time, so I'll keep it brief here. But the long story short, we're shifting from incentivizing on Curve to incentivizing on Convex. Last week, of course, we did our first bribe on Votium, and we're going to be ramping up the funding we're doing on Votium. We were initially sort of turned off from participating on Votium just because the amounts of capital that people are deploying there is very intimidating. Where the competing pools are deploying multiple millions of dollars for their votes. And naively, we thought, why would anyone vote for the second best offer, the fifth best option? And obviously, that's flawed thinking for two reasons. One is quite obvious, and one is a little less obvious. So the obvious reason is that if all the votes flow into the top best offer, that leaves the second best offer available, and it only takes one person to come in and swoop up all those funds. So you can often benefit by being in even the smallest pool if no one else is participating in that bribe. The second, less obvious reason is that most Convex users are delegating their votes to Convex or Votium, and then they're doing all the math to maximize the impact per dollar of the bribes. And as a result, you can deploy any amount of capital you want to Votium, and you'll still get the extra boost that you want. As of right now, for every dollar you're putting into Votium, you can get $4 of CRV rewards back out. So instead of deploying $1 million of OGN in rewards, where people get $1 million of OGN, they can get $4 million worth of CRV. That's going to help our APY for the people who are participating in that pool. And so that's going to be the direction that we move. As well as what we've been talking about, which is continuing to buy CDX and vote locking that so that we can have a more sustainable path forward here. The goal for us is to have at least the 0.5% of the vote just organically, so that we're always included in the convex voting every single week, or every 2 weeks rather. And so that's the minimum threshold of where we want to be, but obviously we're going to try and grow that more. And looking forward to looking for Orion's data and getting a better grasp of how we could actually integrate this logic into the protocol itself versus being something that we do externally. Probably a little bit further down the line just because of the engineering complexity there. But I do think that is the long term, that's the direction we want to be going. No, we're running short on time. We're already over here. But any questions on any of the liquidity mining stuff before we wrap up? All right, back to you, Micah.
Cool. Was there anyone that that wanted to introduce themselves or say hi? Let us know what you've been working on, what you're excited about, how you found us, anything along those lines. Well, there's always next week. There's always Discord. So don't be a stranger. And we hope to see you again sometime soon. I had a few action items. I think I covered most of them earlier, but Daniel, you're going to share a write-up on the OUSD meta strategy later this week. I was going to add a GitHub issue for harvesting multiple reward tokens, so we don't forget about that. Doman, I think you said you would take on the adding analytics to the DApp for to know what choices Ledger users are making with the new UI. And then you were going to investigate collaboration on Dune Analytics. Was there anything else? There were also two action items from last week. Daniel, I think you answered the question on what governance contracts we wanted to use. And then the other one was, I think Josh and Coleman were working on CoinMarketCap and CoinGecko to get them to accurately reflect trading activity. Is there any progress to report on that, Coleman or Josh?
I haven't heard back from them. It's the process is to fill out a form, not to have like a Telegram group or whatever. So they'll just if I do back channel, they just tell me to fill out the form.
Okay. Well, thanks for pushing on that where you can. Any closing thoughts from anyone before we go?
Mika, would it be possible to have 5 minutes with you one-on-one?
Sure.
Thank you.
Just reach out to me on Discord. Happy to talk to anybody anytime. All right. Until we meet again, thanks everyone.
Have a good one. Later.